We first of all look at a topic called tax return. How do we file tax return? What are the type of tax return we have? Timeline for filing tax return. What are the penalties for late filing of tax return or penalty for non-filing of tax return? So this is all what we are going to look at this morning. Last week, we talked about introduction to taxation. So this is our second topic. So tax return. Filing of tax return is one of the legal requirements that must be fulfilled by every taxpayer. It is the responsibility of every taxpayer to file tax return as at when due. What is this tax return? Tax return is a form that contains information about the tax affair of a particular taxpayer for a given period of time. Tax return is a report prepared by taxpayer containing information on a tax affair for a given period for the purpose of complying with tax law. One of the means that we can say a taxpayer comply with tax law is by filing tax return. Filing tax return, that means the taxpayer have complied with the tax law. In this tax return, is going to contain the information about the taxpayer, the amount that the taxpayer pay as tax, the income that the taxpayer earn, the expenses the taxpayer incurred. So how does the taxpayer get is to be assessed to tax? So what is the basis of computation of the tax? The period covered. All this will be stated in the tax return. Type of tax return. We have different type of tax return. Number one type of tax return that we have is personal income tax return. Personal what? Income tax return. This personal income tax return can be divided into two. Personal income tax return, they are those returns filed by who? By individual, employee, sole proprietorship, partnership, etc. So this tax return, this personal income tax return can be divided into two. Number one, pay as you earn. Pay as you earn means payee. These are the personal income tax return filed by the employee on behalf of employee. Payee is a personal income tax return filed by who? By the employer on behalf of the employee. This can be filed on a monthly basis or annual basis. Pay as you earn, like we said, can be filed on a monthly basis or annual basis. So this payee, for the one of annual, it must be filed not later than 31st of January of the following year. While for the one of monthly, it must be filed on the 10th of the following month. That means the payee return for the month of June must be filed not later than 10th of July. But the one of annual must be filed 31st of January of the following year. That means the payee return for the year 2025 must be filed not later than 31st of January of 2026. Now, what are the content of this annual payee return? The content of the payee return filed 31st of January. What are the content of this annual payee return? Number one, completed Form A. That completed Form A means income tax for return or income tax for return of income and claim for allowance. That is completed Form A. We have another one called Form H1, another content of payee annual return. Form H1, that one is called annual income declaration. Annual what? Income declaration. Another content of payee annual return, schedules of tax deduction from the employer. Schedules of what? Tax deduction from the employer. These schedules of tax deduction from the employer contain the following information. What are the information contained by this schedule of tax deduction from the employer? Number one, name of the employer. Name of who? The employer. Tax identification of the employer. Name of the employee. Taxpayer ID of the employee. Every employee must have taxpayer ID. The total emolument for each employee. The consolidated relief allowance. Tax deducted. The overall tax charge and remittance. Evidence of payment of payee in every month. Evidence of payment of business premises. For business premises, for a new company is 10,000, while for an existing company is 5,000. Evidence of withholding tax deduction and remittance. Evidence of development levy payment, 100 naira per employee. These are part of the content of annual payee return. Like we said, personal income tax return is divided into two. Number one is pay as you earn, which we are still discussing. This pay as you earn can be filed twice, can be divided into two: monthly return and annual return. Now, we want to look at the annual return. We said the annual return is filed, must be filed not later than 31st of January of the following year. And this annual return, we state out the content. Completed Form H1, completed Form A. We have Form H1, schedules of tax deduction. Under these schedules of tax deduction, we have different information. Why number 4 content is evidence of payment of payee tax in every month. Number 5, evidence of payment of business premises. And number 6, evidence of withholding tax deduction. Number 7, content of payee return, annual return, evidence of development levy, 100 naira per employee. Now, what is the consequence for non-filing of payee annual return? This payee annual return, like I said, it is the company that will file it on behalf of who? On behalf of the employee. So, failure to file payee annual return is going to attract a penalty of 500,000 naira. That means if a company fails to file payee annual return, that company will pay a penalties of what? 500,000 naira. That is payee annual return. Now, we have talked about payee annual return. Payee monthly return. This one is filed every month. And we said it must be filed not later than 10 days of the following month in which the tax was deducted. Failure to file this payee monthly return. What is the penalty? Failure to file this payee monthly return. It will attract penalties of 10% for every month in which the failure continues. Failure to file payee monthly return will attract penalties of 10% every month in which the failure continues. That is payee monthly return. We are talking of personal income tax return now. This personal income tax return, we divide it into two types. Payee return, which this payee return is annual and monthly. Number two personal income tax return that we have is direct assessment. Direct assessment. This direct assessment is filed by who? Self-employed persons. Those who are not under employment. Those who are not working for anybody. They are the professionals or the traders, artisan, technician, all those who are doing their job, who are self-employed, they are working on their own. They are the ones that file direct assessment. Sole trader, partnership, professionals like accountant, lawyer, etc. They file direct assessments. This direct assessment, what are the content of personal income tax return for self-employed persons, which is direct assessment? What are the contents? Number one, duly completed form, self-assessment form. Duly completed self-assessment form. Number two, duly completed income tax form A. While number three, evidence of payment of direct assessment, which is personal income direct assessment. Number four, development levy payment. While number five, withholding tax credit notes. These are the content of personal income tax return filed by who? Self-employed persons. Now, what is the due date for filing this direct assessment, which is personal income tax return filed by self-employed person? The due date for filing personal direct assessment is 31st of March of the following year. 31st of March of the following year. That means if you are a sole proprietorship or you are a professional, your personal income tax for 2025 must be filed and paid not later than 31st of March of 2026. So personal income tax for self-employed must be filed not later than 31st of March of the following year of assessment. Failure to file this personal income tax return under direct assessment, what is the consequence? The failure to file this personal income tax return under direct assessment, which is for self-employed person, we attract penalties of 50,000 naira. Is going to attract what? Penalties of 50,000 naira. That is the failure to file direct assessment return by self-employed persons. So we have talked about personal income tax return. We are looking at tax return. We want to look at type of tax return. We have talked about personal income tax return. We said this personal income tax return is divided into two: payee return and direct assessment return. This payee return, we also divide it into two: annual payee return and monthly payee return. Ayodele, you want to ask a question? You can go ahead.
My question goes like this, sir. Like Institute of Chartered Accountant now, are they going to fall under direct assessors or under like payee side? That's what I want to confirm, sir.
Your question, I don't understand your question.
No, like for instance, now you mentioned that like this direct assessments now is going to be like accountants, lawyers, surveyor, and some other professional.
The
like
accountant
that.
we are referring to practicing accountants, those who own auditing firm. Do you understand?
Sir.
The lawyer we are referring to practicing lawyer. The lawyer that owns a legal practitioner, that practice as a legal practitioner, that owns a legal firm. Hope
sir.
your question is clear.
Yes, sir. Thank you, sir.
Now, let's go to another type of return. Another types of return. We have company income tax return. Another type of return that we have is called what? Company income tax return. Company income tax return. These are the returns that are filed by the company. Company, they are the ones that file this company income tax return that show the true position of their financial statements, that showed whether they make profit or loss. So this return, it is filed by a company every year, and the timeline for filing this return is within 6 months after the end of the year for an existing company. This return is filed within 6 months after what? After the end of the year. Why? For a new company, this return must be filed within the first 18 months from the date of commencement of business. I'm talking of company return. Company return is one of the tax requirements expected to fulfill by every registered company, and it must be filed annually. What is the timeline for filing it? For an existing company that has been in business for a while, they must file their company income tax return within 6 months after the end of the year. Why? For a new company, they must file their company income tax return within 18 months from the date of commencement of business, or 6 months after the end of the first accounting year, whichever is earlier. Let me repeat for a new company. A new company, if they want to file their first company income tax return, they must file it within 18 months from the date of commencement of business, or 6 months after the end of first accounting year. Whichever come first. Content of company income tax return. What are the content of company income tax return? Number one, duly completed self-assessment form. Number one content of company income tax return. Duly completed self-assessment form. Number two content of company income tax return. Audited financial statements. Audited what? Financial statement. Comprising A, statement of financial position, which is the balance sheet. B, statement of comprehensive income, which is profit and loss account. C, statement of changes in equity. D, statement of cash flow. E, note to the accounts. Another one, statement of accounting policy. That is audited financial statement. Number three content of company income tax return. Tax computation. How do you compute your company income tax? You need to put it as part of your content. That your tax computation will include the following tax: company income tax, education tax, and police development levy. Company income tax, education tax, and what? Police development levy. Number four, capital allowance computation. Capital allowance what? Computation is number four content of company income tax return. Capital allowance computation. Why number five content of company income tax return? Schedules of fees assets. Schedules of what? Fees assets. Number six content of company income tax return. Evidence of payment of tax due. Your tax due, evidence of payment of it. Now, your tax due is going to be computed on a software used by who? FRS. That software is called Tax Pro Mass. It will compute your tax due. Once you input your income and your expenses and your assets, it will compute your capital allowance automatic. It will compute your tax due. And this your tax due must be signed by your external auditors. These are content of company income tax return. What is the failure for, what is the penalty for non-filing of company income tax return? Failure to file company income tax return is going to attract a penalty of 25,000 for the first month. 25,000 for what? For the first month. And 5,000 for each subsequent month. Failure to file company income tax return will attract a penalty of 25,000 for the first month and 5,000 for each subsequent month, plus 10% interest. 10% interest. 10% interest on the amount of tax due, plus 10% interest on the amount of tax due. That is the penalties for late filing of company income tax return. Yes, that is the penalties for late filing of company income tax return. Now, another type of return that we are going to look at, this one is called value added tax return. Value added tax return. Value added tax return is a return also filed by company on their value added tax. This return is filed on a monthly basis. Value added tax return is filed on what? On a monthly basis. And it must be filed 21st day of the following month of transaction. Value added tax return must be filed 21st day following the month of transaction. That means value added tax return for June for the VAT collected in June is the value added tax return for that month of June must be filed not later than 21st of July. We know that the VAT rate is 7.5%. Though there are some changes made by the new Nigeria Tax Act that was recently signed by the president. He has increased the list of exemption, VAT exemption. That Nigeria Tax Act increased the list of VAT exemption, and he also ensured that plant and machinery, VAT on plant and machinery can now be used as an offset to an output VAT. VAT on fixed assets like plant and machinery we can now use it as an offset for the output VAT. Content of value added tax return. What are the content of value added tax return? Number one, evidence of payment of that value added tax. Content of value added tax return. Evidence of payment of value added tax. Number two, completed VAT return form O2. Completed VAT return form O2. Number three, schedules of VAT collected. Schedules of what? VAT collected, showing the name of the company, the taxpayer identification number, and the amount. Number four, content, the total sales value for the month. The total what? Sales value for the month. While number five, content, the total purchase for the month. The total purchase for the month. So these are the content of value added tax return. What is the penalties for penalties and offenses relating to value added tax return? What are the penalties and offenses relating to value added tax return? The penalties and offenses relating to value added tax return. First, we must have it in mind that as a company, you must register for VAT. As a new company, you must register for VAT within 6 months from the date of incorporation or from the date of commencement of business. So if a company failed to register for VAT within 6 months from the date of commencement of business, that company will be liable to what? A penalties of 50,000 naira for the first month of the failure and 25,000 naira for every subsequent month in which the failure continues. Let me recap. As a company, you must register for VAT within the 6 months from the date of commencement of business. And if you fail to register for VAT within that 6 months from the date of commencement of business, you will pay penalties. Penalties of what? 50,000 naira in the first month of the failure and 25,000 for every month, for each subsequent month in which the failure continues. Now, if you fail to file VAT return within that 21 days of the following month, what is the penalty? Failure to file VAT return within 21 days of the following month is going to attract a penalty of 5% per annum plus interest at prevailing commercial rate. Failure to file tax return, VAT return within 21 days of the following month is going to attract penalties of 5% per annum plus interest at prevailing commercial rates. Another type of return that we need to look at is petroleum profit tax return, PPT, petroleum profit tax return. Petroleum profit tax return, they are those returns filed by companies engaged in upstream petroleum operation. Petroleum profit tax return are those returns filed by companies engaged in what? Upstream petroleum operation. That means those companies like Shell, Chevron, Mobil, companies that deal with drilling and extraction of crude oil, they are to file petroleum profit tax return. In accordance with Petroleum Industrial Act, petroleum profit tax return is otherwise known as hydrocarbon tax. Now, this petroleum profit tax return, we divide it into two: estimated tax return and annual tax return. Petroleum profit tax return is divided into two: estimated tax return, number one, while number two, annual tax return. Estimated tax return, they are those, it's a return that must be filed not later than 2 months from the commencement of each financial year. That means, assuming we are in the year 2025, you must file estimated tax return for 2025 not later than February 2025. In that estimated tax return, you are going to show them your estimated tax. Petroleum profit tax is paid every month. You are going to show them estimated petroleum profit tax that you will be paying every month based on installments. Content of estimated tax return. What are the contents of estimated tax return. Number one, estimated income and expenses for the period. Number two, a statement of estimated adjusted profit and loss. Number three, estimated tax and capital allowance computation for the period. While number four is computation of estimated monthly tax payments. Annual tax return for petroleum profit tax. This one must be filed within 5 months after the end of the year. Within 5 months after the end of the year. That means annual tax return for petroleum profit tax must be filed at least 31st of May after the end of the year. In this annual tax return, all what you need to do is to pay the 13th installment of the tax of the petroleum profit tax. Is to pay the 13th installment. And one of the content of this annual tax return is audited financial statement showing the qualified capital expenditure incurred during the period, computation of chargeable profit and loss for the period, computation of capital allowance claimable for the period, and computation of actual tax payable for the period. All these are the content of annual tax return for petroleum profit tax. Failure to file annual tax return for petroleum profit tax is going to attract penalties of 10 million naira initial and 2 million naira for each day in which the failure continues. Failure to file petroleum profit tax annual return will attract penalties of 10 million naira initial penalties of 10 million naira and 2 million naira for each day in which the failure continues. So these are the information on petroleum profit tax return. So this is all what we have on tax return. This is what we have on tax return. So we can proceed by moving to another area called tax identification number and tax clearance certificates. Tax identification number and tax clearance certificates. Tax identification number and tax clearance certificates. That is the next topic we are moving to. Tax identification number and what? Tax clearance certificates. What is tax identification number? Tax identification number is a unique number allocated to the taxpayer. By who? By tax authority for the purpose of identifying the taxpayer. So it is a unique 9-digit number allocated to taxpayer with a view to identify individual, business, other entity in tax return and other document filed with tax authority. Tax identification number is a unique number, unique 9-digit number allocated to taxpayer. Why do we allocate them to taxpayer? We allocate them with a view to identify them. Who allocated to them? The tax authority. How do we identify a taxpayer in the tax office? They don't identify them by their name, ABC Nigeria Limited. No. If you want to do anything in the tax office, they will ask for your tax identification number. Is that tax identification number that they will use to know your tax history, that they will use to know information about you? It's not the name of your company. Objective of tax identification number. Why does tax authority issue tax identification number? Objective of tax identification number. Number one, creating a closer linkage between tax authority in Nigeria. Tax identification number create a closer linkage between tax authority in Nigeria. Another objective, aiding cooperation and information sharing among tax authority. Tax identification number aid cooperation and information sharing among who? Among tax authority. Another objective of tax identification number. Tax identification number increase revenue generation accrued to all the tiers of government. By issuing tax identification number to every company, it will make tax authority to generate more revenue because more taxpayer is going to be in the tax net. When you give them tax identification number, there is no way, you understand? Some of them, by having tax identification number, they will be afraid for not complying with the tax law. It will make them to be paying tax because they know that tax authority have information about them and tax authority can trace them if they did not pay tax. So prevention, it will increase revenue. Now, requirement for tax identification number with FRS. If FRS want to issue tax identification number to company, what are the requirements? This tax identification number, it is issued to company by FRS. Why for individual or for employee for sole proprietorship? Their own is called taxpayer ID. Their taxpayer ID is issued by who? State Internal Revenue Service. Their taxpayer ID is issued by who? By State Internal Revenue Service. So, what are the requirements for tax identification number registration with FRS? If a company wants to register with FRS so that FRS can issue them tax identification number, they must provide the following information. The company must provide what? The following information. Number one, the name of the company. Number two, the register office of the company. Number three, the type of business the company will engage in. Number four, a copy of certified memorandum and article of association. A copy of certified what? Memorandum and what? Article of association. Number five, name and address of directors of the company. Number six, name and address of the banker and auditors of the company. Please try to mute your audio. Try to mute your audio. Who is that? Who is distracting the class?
Yes, you
Another content of requirement for registration with tax identification number with FRS is a copy of certified certificate of incorporation. A copy of what? Certified certificate of incorporation. Another one is proposed date of commencement of business. Proposed date of commencement of business. Particulars of shareholders too, which include their name, their address, the amount of shareholding is going to be included. Why? Another one, the name and address of the principal officer of the company must be included. The name and address of the principal officer of the company must be included. All these are the content of who? They are the content of requirement for registration with tax identification number in the FRS office. Now, what are the transactions for which tax identification number is required? What we mean by this is if you want, there are some business, there are some transaction that if a company want to engage in, you understand, transact, they will ask for their tax identification number. What are the transactions that if you as a company you want to do, they will ask, go and bring your tax identification number. Number one, open of corporate bank accounts. If you want to open corporate bank accounts in a bank, you can't open any bank accounts as a company now. Part of the requirement is for you to bring your tax identification number. Another one, a transaction with other company. If you want to do tax identification transaction with other company, the other company can ask you for your tax identification number, because if that other company deduct VAT from what they sold to you, they are going to remit the VAT and state your own tax identification number so that you can claim the VAT as your input VAT. All correspondence with ministry and government agency. You want to do any correspondence with ministry, you want to collect any document in the ministry or any government agency, they may ask for your tax identification number. Another one, all correspondence with FRS on all return and audited accounts. All correspondence with FRS on all return and audited accounts. They will ask for your tax identification number. Importation of goods, when you import goods and you want to pay custom duties, they will ask for your tax identification number. Another one, application for tax clearance certificate. You need tax clearance certificates. They'll ask for your tax identification number. Another one, bidding for government contracts or pre-qualification. You want to bid for government contract or pre-qualification. They'll ask for your what? Tax identification number. These are the requirements. These are the transactions where they will ask for your tax identification number. We have done with tax identification number. Let's look at tax clearance certificates. What is tax clearance certificates? What is tax clearance certificates? Tax clearance certificates is a document issued by who? By the tax authority. That tax authority can be Federal Inland Revenue Service in respect of company, or State Board of Internal Revenue Service in respect of individual, showing the applicant tax affair. This tax identification number is issued by the tax authority to the taxpayer, certifying that the taxpayer have complied with the tax law, showing that the taxpayer have paid the necessary tax he's supposed to pay in the relevant year of assessment. That is tax clearance certificates. Content of tax clearance certificates. If tax authority want to issue a taxpayer a tax clearance certificate, what are the content of that tax clearance certificate? Number one, the name and address, and taxpayer tax identification number of the company. The name, address, and tax identification number of the company. Total profit or chargeable income. Total profit or chargeable income is also included. Tax payable too is also included as part of the content of tax clearance certificate. Tax paid is also included. Tax outstanding is also included. Nature of business is also included. Type of assessment too is also included. Source of income is also included. Name and designation of the authorizing officer is also part of the content of tax clearance certificates. What are the conditions for granting tax clearance certificate? What are the conditions for granting tax clearance certificate? If a tax authority wants to issue tax clearance certificate to taxpayer, the following condition must be met. Number one, tax have been paid up to date. That means that taxpayer is not owing any tax liability. Penalties and interest raised have been paid. In case tax authority issue penalties and interest to taxpayer have paid the penalties and interest. Another one, return have been filed up to date. That means tax authority, the company, they don't have any outstanding return. They have filed their company income tax return. They have filed their personal value added tax return. They don't have any outstanding return. Another one, there is no outstanding tax query, audit, or investigation. They don't have any outstanding tax query or tax audit or investigation outstanding. No any outstanding on grant. So these are the conditions for granting tax clearance certificate. What are the transactions required for tax clearance certificate? What are the transactions required for tax clearance certificate? What are the transactions required for tax clearance certificates? If you want to collect tax clearance certificate, what do we use tax clearance certificate for? What do we use tax clearance certificate for? What transaction do we use tax clearance certificate for? Number one, application for approval of building plan. If you want to apply for building plan, approval of building plan with government, you want government to give you approval of building plan, government will ask for your tax clearance certificates. Application for firearms license. You need a firearm license. You want to collect a gun. they'll ask for your tax clearance certificate. Application for government loan. You want to collect government loan, they'll ask for your tax clearance certificate. Application for trade license. You want to collect trade license, they'll ask for your tax clearance certificate. Application for award of contract by government. You want to collect government contract, they'll ask for your tax clearance certificate. Application for certificate of occupancy. You need C of O, certificate of occupancy. They'll ask for your tax clearance certificate. Application for foreign exchange. You need foreign exchange. You want to apply, you want to buy a foreign exchange, they ask for your tax clearance certificate. Application for import and export license. You need import or export license. They'll ask for your tax clearance certificate. Application for plot of land. You want to buy a plot of land, government allocated land. They'll ask for your tax clearance certificate. Application for increase in share capital. You want to increase your share capital as a company. They'll ask for your tax clearance certificate. Application for agent license. They'll ask for your tax clearance certificate. So, application for pool or gaming license. They'll ask for your tax clearance certificates. These are the transactions that if you want to do, it will require your tax clearance certificates. If an individual wants to collect tax clearance certificate, what are the transactions that individual will want to do? That they will ask the individual, go and bring your tax clearance certificate. What are the transactions the individual want to do that they will ask, go and bring your tax clearance certificate? Number one, school fees payment. You want to pay school fees in abroad. You want to send a school fees to your children in abroad. You need a dollar. You need a foreign currency at official rate. They'll ask for your tax clearance certificate. Payment for upkeeping, medical bill, traveling allowance, business traveling allowance. They will ask for your what? Tax clearance certificates. They'll ask for your tax clearance certificates. So these are the transactions individual wants to do that they will ask, go and bring your tax clearance certificates. Now, what are the problems of obtaining tax clearance certificates? What are those problems of obtaining tax clearance certificates? Number one, if you want to obtain a tax clearance certificate, there are some time it will result into additional assessment. It will result into what? Additional assessment. Because tax authority, they would like to review your record. They would like to review your account. They will look at it, they will examine your account to know that whether you have paid the right taxes or not. If you have not paid the right taxes, they will ask you to go and pay the additional tax, which is the additional assessment. Before, if you want to take tax clearance certificate, it takes long to be issued. But as I'm talking to you right now, within 1 day, if you request for tax clearance certificate, especially in the FRS, once you comply with the all the relevant tax provision, so once you comply with all the relevant tax provision, they will issue you the tax clearance certificate. There is no need for delay. Another problem that we may face in the case of tax clearance certificate, sometimes this one is common among the State Board of Internal Revenue. The tax clearance certificate issued to individual or employee by the state, some of them are not authentic. They are fake. Because that taxpayer, because it does not comply with the tax law, and he needs tax clearance certificate. So he may outsource it to somebody that let me get tax clearance certificate. When they know that this person, they cannot issue the tax clearance certificate to him, or they ask him to go and pay so amount that is too high, they will go and help him to do some fake or forgery tax clearance certificates. So these are the problems of obtaining tax clearance certificates. So we are done with tax identification number and tax clearance certificate. We are done with tax identification number and what? Tax clearance certificate. So let's look at another short topic that we need to look at is multiple taxation. Multiple taxation. Multiple taxation. We call it multiple taxes in Nigeria. What is multiple tax? Multiple tax is different from double taxation. Double taxation means a situation where income is subjected to tax more than once in different countries. You are in abroad, you earn an income in abroad, they collect tax on it. You take the income to Nigeria, Nigeria government asks you to come and pay tax on the income again. That one is double taxation. It involves two or more countries. Two or more countries. But in the case of multiple taxation simply means a situation whereby similar type of taxes is imposed on taxpayer by who? By different tiers of government. A situation whereby various or similar type of taxes are imposed on taxpayer by who? By different tiers of government. What are the tiers of government that we have? We have federal government, state government, and local government. A situation where federal government collect tax on one income, on the same income too. State government collect tax on the same income too. Local government collect tax. That is multiple taxation. Multiple taxation occurred within a country, while double taxation occur in different countries. What are the type of multiple taxes that we have? Type of multiple taxes that we have. Number one, entertainment tax. Number two, road tax. Number three, market taxes and levy. Another one, car park tax. Number three, another type of multiple taxes that we have, sales tax. Example of sales tax. Some states collect consumption tax. We know that value-added tax is a consumption tax, which is collected by federal government, Federal Inland Revenue Service. Some states apart from after deducting value added tax, some states introduce another tax called consumption tax, which is somehow related to value added tax too. It's a sales tax too. They will collect it on the same good. That is multiple taxation. Road tax. There are some states. The state government will collect taxes from the commercial driver. There is a daily ticket imposed by them, by the state government. The local government within that area too also have a ticket issued to the commercial driver. That is multiple taxation. So all these are the type of multiple taxation that we have. Let me repeat it again. Entertainment tax, road tax, stamp duties. Somebody asked, is stamp duties a multiple taxation? No, it's not a multiple taxation. If you are an individual, you pay your stamp duty to the State Board of Internal Revenue Service. But if you are a company, you pay your stamp duties to Federal Inland Revenue Service. We have refuse collection tax. We have car park permit fee. We have sales tax. All these are what? Type of multiple tax. Now, what are the causes of multiple taxes in Nigeria? What are the causes of multiple taxation in Nigeria? Why do we have multiple taxation in Nigeria? What caused multiple taxation in Nigeria? What are the causes of multiple taxation in Nigeria? Number one, lack of funding. Lack of what? Funding. Particularly for most states or local government. If local government don't have adequate, they are not funding local government very well from the top, or they are not funding the state government very well from the top, they will look for a way to generate revenue internally. And one of the way that a state or local government can generate revenue internally is through the introduction of what? Multiple tax. Through the introduction of multiple tax is one of the way a state can generate revenue. Another causes of multiple taxation is lack of tax education and awareness. Most of the taxpayers, they are not educating them. They are not creating awareness for them. So there is no awareness and education about the tax that they're supposed to pay. Some of them have already paid the tax to state again. Local government will come and pay the same tax. Since they are not educated, they will pay it. Another causes of multiple taxation that we have in Nigeria, multiplicity of revenue agency. We have different type of revenue agency, different revenue agency that we have, especially in the states. LASA, we have Last Park, we have this, so many revenue agencies. And all these agencies created to generate revenue. They will be looking for a way to generate revenue to meet up their target. So this can result into what? Into multiple taxation. Overlapping taxing rights. Overlapping taxing rights. Some of the state governments, they engage in overlapping taxing rights. How does that happen? The taxes and levies, the approved taxes and levies that are supposed to be collected by local governments. Some of the state governments will hijack those taxes and levies. They will hijack them. Example, tenement rate is supposed to be collected by the local government. Some states, they introduce a modification to tenement rate called land use charge. Advertisement permit is one of the responsibility revenue generation of this local government. Some states, they hijack it, they create an agency called State Advertisement Agency. We have another one called manual tax administration. Another causes of multiple taxation, because the tax administration that we are using in Nigeria is manual. Some of the is just of recent. The tax authority are trying to migrate to automated tax system. So when you are using manual tax administration system, there will not be record of who pay tax, who has not paid tax, and there will not be record of what type of tax do we need to pay, what type of tax are we not going to pay. So all these are the causes of multiple taxation. Now, what are the impact of multiple taxation on Nigeria business? Impact of multiple taxation on Nigeria business. What impact will multiple taxation we have on Nigeria business? Number one, multiple taxation will make Nigeria business to be very cumbersome to operate. It will make their business to be very cumbersome. It will make them to be, most of people doing business in Nigeria, because of multiple taxation, it will be very hard for them to be doing business. Another impact is case a multiple taxation result into is high mortality rate of SME. Most of the small, medium, and enterprise in Nigeria, in the country, they will fold up at the early stage. They will liquidate. Why? Because of multiple taxation. This one will come, collectors. This one come, collectors. This one come, collectors. They will not even consider whether this company is making profit or loss. Another one, multiple taxation, another impact that it has, it discourages foreign direct investment. Most of the foreign investors coming to come and invest in Nigeria, they were discouraged. They were not motivated. They were afraid that once they come to Nigeria, they have had so many or similar experience that they will collect multiple taxes from them. Multiple taxation result into lower human capital or lower job creation. Lower human capital or lower job creation. People paying multiple tax, some of the company, they will relocate to another countries. By relocating to another countries, the staff working in Nigeria, they will ask them to, they will sack them. So that one will result into increase in unemployment. What are the solutions to multiple taxes in Nigeria? What are the solutions to multiple taxes in Nigeria? We need to review our constitution to address overlapping taxing rights. Number one, solution to multiple taxes. Review the current statutory provision in Nigeria. We need to review the current statutory provision in Nigeria so that we limit the scope of taxes and levies that can be collected by some states. We limit them. Another one is we should make available to the local government all their revenue. This means we should grant a local government autonomy. Granting of local government autonomy is one of the solutions to multiple taxes in Nigeria. If you give a local government an autonomy, it makes them to generate more revenue. The revenue given to the local government direct, paid to the local government direct, it will go to their account. It will not go to the state government account. Another one, adequate funding of various agencies and departments. All these agencies and departments created by state government, we should fund them adequately. We should do what? Fund them adequately. We should fund them. We should not think that they should go and be generating revenue on their own. Government should fund them, give them subvention. Review the constitutions too to address overlapping taxing rights is one of the solutions to problems of multiple taxes in Nigeria, because multiple taxes is a problem on its own. Automated tax collection process. Automated tax our tax collection process should be automated. It should not be manual. It's still part of the solutions to multiple taxation. So these are the solutions to multiple taxation in Nigeria. Now let's look at, this is where we are going to stop today. Let's look at the taxes collected by each tiers of government. What are the taxes and levy collected by federal government? What are the taxes and levy collected by state government? What are the taxes and levy collected by local governments? Number one, company income tax, petroleum profit tax, education tax, value-added tax. Let's look at the taxes and levy collected by federal government. Company income tax is collected, petroleum profit tax is collected, education tax is collected, value-added tax is collected, custom and excise duty is collected, technology tax is collected, capital gain tax on corporate bodies is collected. So these are the taxes and levy collected by federal government. Now, what are the taxes and levy collected by state government? Personal income tax is collected by state government. Capital gain tax on individual transaction is collected by state government. Stamp duties on investment executed by individual is collected by state government. Simiat, you want to ask a question, you can go ahead. Samiat.
Okay, sir. Thank you. Good morning. What I'm seeing on the screen is still problem of obtaining CCC.
Problems of obtaining CCC?
Yes, like I'm not seeing the current one that you are talking about.
This
okay,
is the current one now. I'm having it here.
Okay, I can see it now.
Oh, you are just seeing it now?
Yes. You were not sharing that part before. So I thought
you're supposed to tell me now. You're supposed to tell me.
No, we are with you. We understood what you're saying. Thank you.
Okay. So I will share the material after the class. The introduction to tax material. Have you received the material?
No, sir. Please help us share the material for tax. I don't have it at all.
Okay, I will do that. I will do that.
Thank you, sir.
Yeah. So taxes and levy collected by state government. Personal income tax. withholding tax on individual transaction, capital gain tax on individuals. We have stamp duties on investment executed by individuals, road taxes, business premises is also collected by state government. Development levy is also collected by state government. Market taxes and levy is also collected by state government. Certificate of occupancy is also collected by state government. What are the taxes and levies collected by local government? Tenement rates, shop and kiosk rates, marriage, birth and death certificates, slaughter slab fee is collected, right of occupancy fee is collected, market taxes is collected, motor park fee is collected by the local government, radio and television license is also collected by local government. Illegal park fee is also collected by local government. Signboard advertisement permit fee is also collected by local government. All these are the taxes and levy collected by local government as stated by the Constitution. All these taxes and levy I mentioned for each tiers of government, it was clearly stated in the 1999 Constitution that these are the taxes and levy that can be collected by state government. These are the taxes and levy that can be collected by local governments. So this is what we need to discuss today. Today, we look at first, we look at tax return. Second, we look at tax identification number and tax clearance certificate. While the third one is multiple taxation. Next week, we continue again. We look at another theoretical aspect in our syllabus, tax administration, and we may look at tax assessment. After that, we can now go fully to the calculation aspect of our syllabus. So any question, any query, any observation?